Welcome to a special edition of Catalyst. I'm Shauna Smith alongside Madison Mills. And coming up, we are going to be bringing you full coverage of the Magnificent Seven throughout the program.
The time has come for big tech earnings. We're going to break down the biggest themes that investors are looking for in the earnings results as those market leaders take center stage.
Several members of the Mag 7, including Microsoft, Apple, Amazon, Alphabet, and Meta, are set to release their earnings reports over the course of the next several days. We will be speaking with industry experts to break down the key things you need to watch and know heading into this earnings season.
And we push ahead to the biggest company in the group, Nvidia, as the all-important AI chip giant ends the Magnificent Seven results, but not for some time. We'll break down all of what you need to know ahead.
Magnificent Seven earnings underway as investors focus on the market's biggest drivers. Let's get to the big picture outlook and the key things that investors you need to be watching for from these big tech results. For that, we want to bring in Nancy Tangler, Laffer Tangler Investments CEO and Chief Investment Officer. Nancy, it's great to have you back. So let's talk about where things stand today. Of course, expectations going into this earnings season is for, once again, these big tech names to really be the driver of earnings growth. Do you think they're going to exceed or even just live up to expectations?
I do, Shauna, and thanks so much for having me. I think when you look at the reliable earnings growers, these companies check all the boxes. And if you're worried about a slowing economy, I'd much rather own these companies than traditional defensive. I think big technology, are the new defensives. And if you look at free cash flow, although they've been criticized for spending, large CapEx budgets, the free cash flow they're producing is unbelievable. It's much bigger than most countries.
So then, is the Magnificent Seven bull rally here to stay, Nancy? And if so, for how long?
So, Madison, I think so. I mean, I don't like all of the Mag 7. We've broadened out our tech exposure and our exposure to other sectors over the last year. But I do think there's a few of the names you just can't argue with. We saw Tesla's earnings. They were incredible. They beat on every metric. My favorite part of the business is the Megapack business, which is the utility grade battery storage business. And that grew at 52%. It's a small portion of the business, but it's the fastest growing, most profitable. So when you look at Tesla being able to beat on earnings, beat on revenues, and expand margins, that's pretty compelling. And so I think you want to own select names. I don't know that you want to own all of them, but I don't think there's going to be any harm because some of them they're trading at pretty attractive valuations despite all the hand-wringing.
Nancy, what companies or what stocks are you avoiding in this space?
I mean, we've been 100% wrong about Meta. We owned it for many years and then we sold it, around 300, and it continues to deliver. So that is the one that we don't own. And I'm not going to chase it at this point, but we do own the rest of them. And I think in varying weightings. So Nvidia and Apple, a medium-sized weighting, Microsoft an outsized weighting, and and Google an outsized weighting, I guess I would say. That's largely due to valuation and the ability to step in. And we'll continue to add to the Nvidia and Apple as we get the opportunity. We added to Nvidia in the summer tech swoon, and that was a great opportunity. And so we'll continue to wait and be patient.
And Nancy, Tesla might be it probably is not going to fall into this category. But when you take a look at the rest of the Mag 7, how much of this good news has already been priced in given their current valuations?
Yeah, so I was pretty pessimistic. I went to We Robot. I was sort of nonplussed as a Tesla investor. And I was a little bit pessimistic, though we still own it. And clearly everyone else was because the stock shot up on the news. So I think, that there is a risk that you'll see a name like Microsoft beat, which they do about 76% of the time on earnings historically. And you may get nothing out of the stock price. It's been trading sideways for the last all year, actually. But at some point, the catalyst will kick in. And it's been trading that way because people are worried about the CapEx budget, but it's still producing in 2024, $74 billion in free cash flow. So that's after the CapEx. And so they're growing the dividend, and you can just kind of hide out in Microsoft, in my view.
Well, Nancy, you teed me up perfectly. I am curious, what is the single biggest thing that you want to be watching out for heading into Microsoft's earnings?
I think we're going to be focused on, Azure, as is everyone else. Is it going to continue to accelerate? It did last quarter, and they got nothing for it. We're going to be looking at margins, and then, just the guidance for the future, because I think, they announced their CapEx budget. Wall Street didn't like it. Wall Street analysts don't run businesses. Satya Nadella does, and my money's on him. So I think we want to hear the monetization of the AI. Just forgot the name of it. Their AI chatbot and Copilot. Sorry, and we will see how that is going, because that's the criticism on AI, is that it has not been monetized.
Nancy, that happens to me all the time, so don't feel bad at all. When it comes to the performance that we've seen from Microsoft stock since the start of the year, we're looking at gains of just about 14%. Now, that far underperforms what we've seen just in returns here compared to the broader S&P 500. Is this earnings season, is that going to be the catalyst to really get Microsoft back on track?
No, Shauna, I think largely it will probably be driven by Azure and monetization of AI. And so if they give good guidance on that, I think the stock will have an opportunity to appreciate. We were adding to it right before the new bull market started at $200 a share, 214, 215. And that's a great generational opportunity. So it also matters, of course, where you got in, how patient you're willing to be. But they're growing the dividend 10% a year, even though the yield isn't super high. You get that growth as an offset against inflation, and so I think you can be patient. We'll see. They've when they report, they usually outperform the majority of the time after the report.
All right, Nancy Tangler, great to kick this off this special with you. Thank you so much for taking the time to join us here this morning.
Thanks, guys.
Coming up next, we are doing a deep dive into Meta, Alphabet, Amazon, and more. Stay with us. We'll be right back. Turning now to focus in on three members of the Mag 7, Amazon, Meta, and Alphabet. With a combined market value of more than $5 trillion, these three tech juggernauts dominate across e-commerce, social media, and search. To discuss, we want to bring in Mark Mahaney, Evercore ISI's Senior Managing Director, Head of Internet Research. Mark, it's great to have you on, and you're the perfect person to talk about these three names. So let's kick off this coverage with Alphabet. A lot of eyes are going to be focused on what exactly we are hearing from Google's parent company. Of course, it's everything from Google Cloud all the way to the advertising revenue. I'm curious, what is the number one or maybe the top factors that you will be looking for in this results?
I think it starts with search and it probably ends with search. So can they maintain search revenue growth, kind of double digit, solid 12, 13, 14% search revenue growth year over year? Does the outlook continue for that? Second is YouTube. If there was one weakness in the June quarter, and like generals, investors always battle the last quarter. The softness last quarter had to do with YouTube, which came in a little light. So does that turn around or not? And if it doesn't, why hasn't it turned around? It's not like it's declining, but the growth did come in light. And so that would be the secondary issue. And then third, there is a broad expectation in the market that the cloud companies will be able to print accelerating revenue growth in the back half of this year because industry cloud demand is accelerating. So Google Cloud should show that. By the way, so should Microsoft Azure, and so should AWS.
I wonder what you think, Mark, about the AI goodness. It feels like Google has not had the first mover advantage on that. What do you expect to hear from Alphabet's earnings specifically on AI?
Well, they've been talking about how they're trying to infuse AI into all their products and services. I mean, I think you're seeing it in AI overviews or in Google Gemini. And then I think you're seeing it also from a marketer perspective. So not too many consumers see this, but in terms of the way that they're able to help marketers and advertisers better target, better manage ad campaigns, better drive attribution, and all of that should lead to a higher return on ad spend, which should lead to continued kind of robust ad revenue growth across the board. So I actually think Google's done a decent job with AI. They've been investing in it for, 7, 8 years or something like that. I think they got caught a little bit flat-footed by OpenAI, but my guess is that they have the ability to easily catch up to where OpenAI is.
Mark, let's zero in on Meta. Meta has certainly been an outperformer among the Mag 7 companies since the start of the year. We're looking at gains of over 60% since January 1st. Of course, a lot of the focus is going to be on CapEx spending plans. What exactly we are going to be hearing from Zuckerberg on the call or some of the other Meta executives. Is this the type of momentum that you see continuing here after third quarter earnings results, or is this a risk here of almost a catalyst to the downside?
It's probably more the latter than the first. There's this mean reversion trade that, I think is a probability with this name. Look, I think fundamentals are well intact with Meta. Is it actually the best performing of the Mag 7? I guess it probably is. I don't know. Probably not with Nvidia, but I don't cover some of the other names. But in the internet space, the fundamentals have been amongst the most and probably the most impressive in the advertising space. I mean, especially at their scale, they're doing well over 20% revenue growth. That is truly impressive. I think there's a lot of kind of untapped areas, threads, click to message ads, WhatsApp, Facebook Marketplace that they can still kind of lean into to sustain what I would call premium growth, mid-teens, maybe even high teens over the next couple of years. Margins are rising. So the expectations are high for this stock. I think they'll be able to deliver against them. I like the stock. It's not one of my top picks because it's not that dislocated right now. It's not dislocated at all. It's probably the most consensus long in large cap internet. But maybe the one trick or one thing, if the stock were to trade off, it would probably be because the company were to surprise people with a really aggressive CapEx outlook for next year. I think that's a possibility. I don't think that's the probability, but I think it's a possibility that happens.
Well, and given that Meta has found a lot of success by being really defensive on the balance sheet, I wonder, too, what you think we're going to learn about their expenditures when it does come to AI. Do you think that we will get any indication about any ROI on their AI spend this cycle, or will we have to wait?
I think we'll get it. I think we've gotten it. The last 2 years, if you look at the ability of this company to recover to almost 30% ad revenue growth, that came because of AI. They used AI to rebuild the user interface to make it more of a media platform rather than a social platform, and they used it to dramatically improve the ad targeting, campaign management, ad creative for marketers, and that's why. Meta right now is perceived to be kind of the easy buy amongst marketers, amongst advertisers. I think they'll be able to give you more and more data points that prove that they've been able to effectively, with a good ROAI, they've been able to effectively invest in AI, which is one of the reasons why I think they've been so successful with it. That I think they may well decide to even more aggressively lean in. I don't think any of these major internet tech companies, the big ones, Amazon, Google, and Facebook, Meta, I don't think any of them are going to step back and say, hey, we're cutting back our AI CapEx. They're either going to keep it where it is or they're going to accelerate it even more. And that could be a little bit of an issue for investors.
Mark, zeroing in on Amazon, I know it's your top pick within your coverage list right now. You've got a 240 price target on the stock. Explain to us or break down that bullish call and why you're so confident in Amazon at this juncture.
I think Amazon can go higher if AWS growth continues to accelerate, high margin business, large TAM, market leading position. If they can kind of prove that 2 years ago, the narrative was they were losing share to Microsoft. If that narrative changes, and it would change if they continue to show accelerating revenue growth, I think that takes the stock higher. If retail sales growth for Amazon, kind of around 10%, kind of stays consistent, there's no real sign of consumer softness at Amazon. And if retail margins continue to rise, the trick here is they're investing a lot in this new satellite communications initiative called Kuiper, which is kind of a competitor to Starlink. So investors are going to want to know what's happening to the core retail margin trends ex Kuiper. If they can show those to be steadily, consistently, solidly rising, I think if you put those two or three elements together, the stock goes higher. That's why it's one of our top picks. It's why it's our top pick.
Yeah. Mark, let me get 30 seconds from you on AWS, making up about 17% of the business, I believe. What do you expect to hear from them about growth moving forward?
Acceleration. So they did 19% year-over-year revenue growth last quarter. That number's probably 21% this quarter. And it's because we're behind the optimization cycle, because AI workloads are leading to more requirements or more business for storage and compute, and because corporations as a whole are re-engaging with cloud computing. We should see acceleration from AWS. By the way, if you don't, I think that'd be a real negative catalyst for the stock.
All right, Mark, we got to leave it there. Thank you so much for joining us. Appreciate it.
Thank you.
Coming up, we're diving into Apple and Nvidia. Stick around for that next, right here on Catalysts.
Apple's quarterly results providing insight into the company's debut of its iPhone 16 and initial sales from that release. The company also releasing its long-awaited Apple Intelligence software. Here to break it all down, we want to bring in Ramon Alamas. He is IDC's research director. Ramon, it's great to have you here on Yahoo Finance. So there's been some worry, I think, out there just about demand and what exactly that looks like for the iPhone 16 this quarter and going forward. How do you see that shaping up?
I think we're still very much in the early innings of the iPhone 16. Look, there's a lot of things going on with the iPhone 16 that makes it really wonderful. I mean, one of the things is the camera, a lot of it is the interface. But you got to also realize that, people are taking their time replacing their phones longer than they used to. I mean, way back when, it used to be almost like every other year. Now it's coming up to about 3 or 4 years. And now that we have to wait for Apple Intelligence to come out next week, it wasn't ready, as soon as, out of the box. So I think there's going to be some tempered, patience over there. But I think people eventually are going to come, especially with the holiday quarter bearing down on us really soon.
Well, Ramon, given that AI is obviously a very new technology, what do you look at to suss out whether or not that AI software, once it is released to Apple consumers, is going to be enough to get people to potentially say, okay, this will be the thing that gets me to upgrade my iPhone early? What if it is just different this time?
Well, I think there's several things you got to look out for with any new technology that not just Apple, but almost any company is going to come out with. Number one is going to be convenience. Does it make my work or does it make my life a lot easier than it used to be? Do I have to just do one click or do I have to go through 5 clicks? So that really helps. Number two, is it just going to be, very intuitive? Is this going to be something that I don't really have to think about? I can almost do it, blindfolded. Is it going to be, that easy? But, the third thing that I'm really looking for is, how is this going to benefit, people's lives, which seems to be the thing that comes out. Hey, it's great that AI and Apple Intelligence specifically is going to make, a lot of processes easier. But when you look at the, average consumer who says, well, I can take a picture, no problem. I can, draw a text, draw a picture, write a text, pretty easily. How much easier is this gonna make it for me? And if Apple can successfully answer those questions, then we're going to move on to the next piece. There's adoption, then there's usage, then there's, sustained usage. And so those are the kind of the 3 things that I'm looking at, as, the months go by after AI launches.
Ramon, there was a recent downgrade here on Apple, and one of the issues that the analyst there was calling out was some of the unrealistic expectations, and he was focusing on those unrealistic expectations to reaccelerate growth across all product categories and all geographies. I'm curious, do you see that being a challenge, or how big of a challenge do you see that being for Apple over the next several quarters?
Well, there's a lot of pressure put on Apple right now, especially in light of, some of the recent products that came out this year. I mean, a great example is going to be Apple Vision Pro. A lot of folks who are saying, hey, this is going to be the next, growth generator for Apple going forward. They're going to sell millions of units. And, from where we're sitting, that really hasn't happened. Even after, it launched in the US in February and then came to, several markets across Europe and others, later on in the spring. This was not a million unit mover, kind of like we've seen with the iPhone and the tablet and the watch. So when you kind of put it all together, a lot of people are saying, some of these things that we've been seeing and waiting to come out, have they been, lighting the fire as much as we thought it would? No. Okay. But, I think, we're still very much in the early innings, especially with something like AVP, Apple Vision Pro, where, can we judge the entire future product line on just its first initial one? Absolutely not, because if you take a look at Apple's history, Apple iPhone, the first time it came out, it barely sold 500,000 units. Same thing with the watch, same thing with the iPad. So we're going to look at, what that next iterations are going to look like, how Apple's going to look to innovate and improve what they've already done, and also, most importantly, how those prices are going to change. Because if you take a look at an Apple Vision Pro, that's several $1,000s that not a lot of people have ready to spend. Looking at something, say, $2,000 or lower, perhaps that's something that more consumers could gravitate towards.
Ramon, before we let you go, what is the single biggest thing investors should be looking out heading into Apple's report?
There's the single biggest thing for me is going to be the iPhone, because again that always accounts for about 67 to 70% of total revenue each time that you look at it. But take a look at how services are slowly growing. I mean, over the past couple of years, it used to be the number 3 revenue generator. Now it's the number 2, and that margin is growing much bigger compared to the iMac and the iPad and the wearables lines. So it's one of those services that Apple has to offer, where it almost literally prints money. And I'm not saying that Apple has to introduce new services. I think what they are to do is reach into its base and get more of its current users more invested into those services, saying, hey, we have storage, we have photos, we have a lot of things here for you that we could help make your life a lot easier. So keep an eye on how much services continues to grow, and how much it's going to have a spread compared to some of the other product lines.
All right, Ramon, thanks so much for joining us. We appreciate it.
Thank you.
And last but obviously not the least to report, we've got Nvidia, the AI chip giant with a market cap greater than $3 trillion, will close out the Magnificent Seven, reporting towards the end of November. Joining us for more, we've got Toshiya Hari. He is Goldman Sachs head of U.S. Semiconductor Research, and he holds a buy rating on Nvidia. Toshiya, it's always great to speak with you because you have such great insights into Nvidia. I know that you recently met with Jensen Huang. You also had him speaking at the Goldman Tech Conference earlier this year. What is the biggest thing that you learned from those conversations that is going to impact your thinking heading into Nvidia's print?
Of course. Thank you so much for having me, Madison. You're right. We did have Jensen attend our conference in early September. We were also on the road with him and the rest of the team very recently. Look, there are a couple of things. First, in terms of the demand profile out there, the environment continues to be very robust. If there's a problem, it's a supply problem, not a demand problem. You've got the large hyperscalers, which we will hear from next week from a couple of them. They're still in the early stages of the build out from an AI infrastructure perspective. The customer profile is broadening beyond the hyperscalers into enterprises and also sovereign states. So there is demand across the board there. Secondly, I think there's been this perception historically that NVIDIA is very strong in training, yet their competitive position could potentially dilute as we transition to inference. As you look at the most recent models that have come out from OpenAI, the complexity from an inference workload perspective is going up, has gone up. And as that proliferates to other models, we think that will only grow NVIDIA's growth opportunity set and potentially expand the competitive moat that they have. So again, demand very strong, competitive moat very sustainable as well.
Yeah, so Toshiya, it sounds like you're saying that any concern almost of the fact that NVIDIA could be slightly losing their dominance, or the fact that some of these smaller players are gaining maybe more of a competitive edge or better able to compete with NVIDIA, it doesn't sound like that's worrying you at all.
It's something to definitely keep in mind and to be cognizant of. And there are a handful of startups that are making really good progress. There are other merchant companies as well that compete effectively with NVIDIA. But when you think about NVIDIA's ability to really innovate across multiple components, if you will, it's not just the GPU. They've got their internally designed CPU, the Grace CPU. They've got NVLink, which is a switch that essentially connects multiple GPUs. They've got Ethernet connectivity. They have InfiniBand connectivity, and obviously they have a very broad suite of software that augments their hardware capability. So when you think about their breadth and their ability to innovate at a 12, 18-month cadence, I think it's going to be very difficult, very challenging, and expensive for others to compete head-to-head with NVIDIA.
I want to get your response, Toshiya, from two things that analysts we've spoken with have called out in a somewhat bearish case on NVIDIA, though you can't really be bearish on NVIDIA right now. But they've talked about the potential competitors, something like a Cerebras, for example. They've also talked about the potential slowdown in demand if we do have a macro challenge moving forward. Which of those two do you think is more likely, or do you think that neither one is actually going to be that big of a headwind for NVIDIA?
Yeah, it's a great question. Between those two, Madison, I would say the latter probably comes up more and more in our conversations with investors. Again, I don't think the company is complacent in any way. They are very paranoid when it comes to competition. But again, the bigger debate is really how to think about sustainability of demand going forward. The majority of investors, we believe, are fairly comfortable with the outlook going into calendar 25. The big question mark is calendar 26. To the extent CapEx continues to go up at the hyperscalers, potentially negatively impacting their gross margins, their free cash flow, what does that mean for 26 and beyond? So between those two, Madison, I would be a little bit more concerned about the latter. But again, at this point, we remain pretty positive on the stock and on the trajectory going forward.
Talk to me about what you've heard from those hyperscalers about their CapEx when it comes to Nvidia. There's been this big question about whether or not we're going to see a return on that investment from hyperscalers. What are you hearing about that?
As of now, Madison, I think, again, as a group, as a cohort, the hyperscalers are very much in build mode. Our colleagues' capital spending estimates for calendar 25, the bottoms up number is suggesting sort of mid-teens to high teens growth. We do think, based on what we're hearing from customers and partners and the supply chain in Asia, there's probably more upside risk to those numbers. So again, we'll find out as we progress through next week and a couple of the big customers report. We do think there's potential upside there. Again, the big debate is not so much calendar 25, it's really calendar 26. At this point, it's very difficult to prove or disprove where things are headed beyond 25. To the extent we're sitting here in 6-12 months and the monetization is not there, the ROI is underwhelming, increasingly we would potentially become a little bit more worried about not just Nvidia, but the companies that really make up the ecosystem from an AI infrastructure perspective. But at this point, again, we remain very constructive.
So Toshiya, what does that tell us about where the stock's headed? I'm guessing it's headed higher in your view, and you see new all-time highs on the horizon.
That's right. We do expect upside from here. When we compare and contrast how we're thinking about the 25 earnings profile, the margin profile for the company relative to street consensus, we're modeling about $4.65, give or take, in EPS for calendar 25. As of this morning, I believe we're about 15% above street consensus. So, again, we have about a month left until the company reports. But as we progress through earnings season, we hear from the hyperscalers, we hear from Nvidia in a month's time. We would expect street numbers to move up and for that to drive the stock higher as well.
All right, Toshiya Hari, Goldman Sachs Managing Director, thanks so much for taking the time to join us.
Thank you.
Now, we've heard from several analysts and experts discussing those Mag 7 names. Let's get to some of our key takeaways. And Maddie, for me, it was all about the bullishness that we've heard consistently over the last 30 minutes. We talked to portfolio managers, we talked to analysts who specifically cover these names, and almost every single one of them were very bullish just about where AI spend is headed. And I think that was one of the concerns, if you can call it that, going into this earnings season, is whether or not these results were going to live up to expectations, the risk that maybe we could hear from some of these hyperscalers, the potential here for them to be pulling back on some of their AI spend. But if you listen to Mark Mahaney, who covers a number of these names, he was very bullish on what that was going to look like. And then even the Nvidia analyst that we were just talking to there from Goldman Sachs, just really making the case that Nvidia is well positioned. They're a very dominant player within this space, and he doesn't see the risk of any AI spend slowing down, at least looking ahead until 2026.
If there's any risk, it's to the upside, is what he was talking about, and the importance of this kind of competitive moat around Nvidia as well, that the company is paranoid is the word that he used, which I thought was fascinating, about any competition, so that's not the concern. It's also interesting how much the macro environment doesn't seem to be a big issue. He talked about the importance of that as a potential risk for Nvidia, but saying again that that's not going to come up until 2026 here. Also, he was just on the road with Jensen Huang, which, I mean, that's cool. It would have been fun to talk to him about that celebrity sighting and what that was like. But and just the degree to which Jensen talked about the competitive moat that the company has moving forward. It seems like the hyperscalers who might have gotten dinged by Wall Street for their increased AI spend, they're saying, well, whatever, we don't care. We're still going to continue to spend on it because this is the future.
Yeah, and also the big company we haven't talked about yet is Apple. And we talked to Ramon Alamas over from IDC Research about his expectations heading into that and some of the questions or uncertainty surrounding what demand was going to look like. And he was actually relatively optimistic optimistic just in terms of what AI is ultimately going to be in terms of a driver here for Apple going forward. He talked about maybe some of that uncertainty when it comes to services, revenue, services growth, and what exactly that is going to look like, one of the key parts that he is looking for in this earnings report. But again, when you take a look at that one-year chart of Apple, you're looking at gains of just about 35%, is trading above 232. So the street remains optimistic about what we are going to hear from them over the next several days.
And what he said too, just about how it depends on how good Apple Intelligence is and like how much more productive it makes individual consumers. If people love it and are talking about it a lot online, then maybe it does lead to a huge gain in sales. But if it's just kind of a little bit of AI cherry on top to make investors happy, then it's probably not going to lead to this huge surge in sales.
Going to be a wait and see to see how everyone reacts to it. All right, well, coming up next, we will be looking at some of today's biggest market drivers. On the other side, we'll be right back.